Good morning. Hope you guys can hear me well. And it is Wednesday morning, 9:30. So as promised, we're coming in with our live today. I'm waiting for David Gazarian from IQ Mortgages to join us. And we're ready to answer some of your questions. Thank you so much for joining. Hi, Gordon. How is real estate market in Arizona? Good to see you. Okay. And
all right. Good morning. Morning, Alexandra. Can you hear me? I'm having trouble hearing you. I can't hear a thing. I'm so sorry.
David, can you hear me now? Oh,
I can hear you now.
morning.
Yes. Good morning.
So I've been talking with no sound. And so good morning to everybody who joined us. Just because I've been talking with no sound, this is Wednesday Live about the mortgages and the real estate market with David Kazarian from IQ Mortgages. Thank you for joining us, all of you guys. Hi, Gordon. Hi, Val. Hi, Nikita. And let's jump right into it, David. First of all, please tell me, since last time we talked, the consumer price index or the inflation index came out. So what did happen to the rate, or how did it affect our mortgage market?
So yeah, that's my favorite thing to look for, because that's a very positive indicator for our market, for the housing market. So every month on the 12th, it comes out 8:30 a.m. So I looked for it, and it dropped. So what happened to the CPI, Consumer Price Index? It dropped, which means inflation is normalizing. That's such a good positive news. Inflation is normalizing. It's been dropping for months. So what happened? It dropped, and we're gonna. It's very good news. Now, what happened to the interest rates? Interest rates did sort of drop, but the thing is that when you watch the news, they'll tell you, oh, rates have dropped because of the CPI. They dropped maybe like 1/10%, and they came right back up. So we got phone calls from current clients, past clients. Oh, the rates are good. Can I get a 4%? Well, no. It was like a minuscule, and it came back up. It's enough for the news outlets to take it and run with it, but we don't have a rate improvement, the kind that I'd like to probably talk to clients about.
So the price index came with the good news, but it did not affect the interest rates.
It did not drop the rates the way that we would want to. Yeah,
where
absolutely.
are we at right now? Like this week, what do we expect as far as the interest rates?
Well, again, if when someone asks about interest rates, you usually talk about conventional loans. So, I'm looking at my pipeline here. I've got loans as low as 5.1 and as high as 8.5. So it really depends on what kind of loan you're going for, whether it's government or a no-doc loan. But the rates are steady this week. To answer your question, there depends. If you're getting a government loan, they're probably going to be in their fives, especially with a realtor like you. You got so much money for that one client that we're closing today. It's unbelievable, the rate he's getting, and we have some no-doc loans that are in the eights. But hey, that's a different story. But rates are unchanged, I would say, this week. They've sort of been stagnant for a while.
Thank you for that. And do you actually think that the mortgage rates have peaked? We experienced the doubling of the interest rates last year. Like we went from 3 to almost 8 last year within 12 months, which
Sure,
was the highest increase within the
sure,
period of 12 months that I don't think it ever happened before,
sure,
correct? In the mortgage industry.
sure. No, as far as I'm aware, the Federal Reserve had never, as far as I'm aware, had never increased the prime rate as much as they did in 1 year last year. So no, that was a very strange year. But do I think that the rates have peaked? Yes, I do. Rates haven't changed since November. They dropped for a little bit, then came back up, and they've been holding steady for at 7, a little over 7, for quite some time. So I do think they've peaked. There is a slight risk that that they'll go up slightly more with the Federal Reserve's meeting at the end of this month. He has promised to do another 1% increase this year. But the inflation is dropping, so that's going to sort of cancel out. So I think rates have peaked, and with time, very slowly, rates are going to start coming down. That doesn't mean that that'll happen in April. That may not happen in June, but I think we'll sort of plateau, and maybe towards the end of the year, maybe in a year from now, we'll have
Are
much
we
lower
talking
rates.
about threes?
We're not talking about threes. We're never going to talk. Okay, let's label something. Threes and twos are pandemic rates. Okay, so we're not going to have pandemic rates, guys. It's just not going to happen. We had rates in the threes, and then we're paying the price right now. What's happening right now is because of those threes. So get that out of your head. That's not going to happen. Now, in a healthy economy, in a healthy inflation, I think the rate should be high fours, low fives, mid fives. And that's what we had right before the pandemic. I mean, end of 2019, early 2020, rates were at 5.25, and that's what rates need to be. And when we talk about rates coming down, that's where they're going to come down eventually if we have healthy, if nothing crazy happens, if we have a healthy economy, which I hope we do. That's what rates are going to be. Rates are not going to be in the threes. If someone's waiting for threes, it's just
Okay.
it shouldn't happen.
And obviously, everybody is reading the headlines. So first, we're
Yeah.
having, like we're reading about the housing crisis. Then we're like news number one, it's a housing crisis. News number two, like we're going into the recession. So let's talk about the recession and the interest rates. During the last 5 recessions, starting from 80s, the interest rates, the mortgage interest rates went down. So does it mean that if in 2023 we go into the recession, as everybody's promising us so much on TV and off the newspaper articles, like does it mean that we're looking to inevitable decrease of the interest rates?
Interesting. So you want the short answer or
I
the long
want
answer?
I want your answer because you're
um,
an expert and we're here to get your expertise. We're here to pick on your brain because you're one of the brightest
Thank
brains
you.
in this
Thank you.
industry in Las Vegas market.
Thank you. So what happened in the last 40 years, and this CoreLogic and a bunch of other big companies, data companies that employ economists and statisticians, what they said is in the last 40 years, even during recessions, a housing market has increased on average 4%, and that includes 2008. So even if you include the big dip of 2008, housing market has increased. Now, guys, understand when we have a recession, we technically have been in a recession for a year, but when we have a recession, um, the Federal Reserve usually drops the rates. That's one way. That's what they did. They treated the pandemic as a recession as well. So they drop rates. So in recessions, if I don't have a chart with me, but I do have a chart somewhere, if you were to look at housing prices, prices have gone up during recessions. Uh, so recession is not necessary. It's a bad news for the economy, maybe, but it's definitely not news for the housing market and for the home prices.
And
Hasn't been at least.
then what kind of news recession is for the mortgage interest rates?
So okay, so traditionally, it's It's not an easy answer. Traditionally, when you have a recession, the Federal Reserve drops the rates, makes the money cheap, so the economy keeps on humming and people continue borrowing. And that's what they did during 2020 and the pandemic years. But right now we still have a high inflation. So if the recession hits, they're not going to be able to drop the rates again because the inflation will come right back up. So inflation needs to be controlled before the Fed is able to drop rates. So but inflation is getting normalized. I mean, it's been dropping at least 0.5% every month. It was 7.1 in November and it's 6.5 in December. So inflation is headed in the right direction, which is low. So yes, if we have a recession, if again, by normal economic standards, we are in a recession. We have been since July 1st of last year. Okay, but maybe people are more, pessimistic and talking about the crash. Who knows? No one knows really. There really isn't a person that really knows what's going to happen. But the Federal Reserve will be able to drop if inflation is normalized. Right now, we still have 6.5 is considered high inflation, so they're not. If crash happens
So
tomorrow,
if
they're
we
not going to
were
drop the
to
rates.
reiterate it for everybody who's going to listen to us right now, or everybody who's going to listen to this live in recording. So when we had 3% interest rates, we also had 2%
Yeah,
inflation. And we had the recession, the pandemic
yeah,
recession. So those were the factors that led us to the 3% interest rates. So guys, for those of you who are waiting and expecting 3%, watch the watch
not going to
the
happen.
inflation rate, hope for the really bad recession, and see if the rates are going to drop, correct?
You're so right. You are, Alexandra, you're so right. So when into early 2020, I looked at it a couple of days in early 2020, their inflation rate was 2.1. When you have a 2.1% inflation rate, then and you have like an economic whatever, like a pandemic, then you can drop rates because when you drop rates, you're going to have an inflation, but you have low inflation, you have room, right? Now we are sort of trying to lower the inflation that we created since, so we don't have room to drop rates yet, but we will because we're sort of bringing that inflation rate down. So you're right, but we're not going to have 3%. God forbid, because that'll be another 2-3 years of high interest rates before we can control that.
So,
So no.
David, let's talk about the opportunities in this market because at the end of the day, you and I are here to educate people and to actually let them know that in every market, no matter what, there is an opportunity. And this coin flips,
Hmm.
and some of the experts, they've been heard to say that these might be the last 2 years for some of the consumers to enter into owning a home because some of the consumers would be totally priced out of the housing market. So let's talk about what kind of opportunities you see because you close like thousands of loans every like every year you've been doing it since 2005 and you see the opportunities, how it works like through different timings. So what are the opportunities that you are seeing right now in the market for the consumer to enter into the owning a home?
Sure. So here's what happened in the purchase market. In 2021, we had bidding wars. Everybody knows that even if they try to buy a house and they were outbid, because if you went with your minimum 3% down, entered the market in 2021, somebody came in with 20% down or 40% down and outbid and offered another 30,000 on top. The seller was not going to accept your 3% down offer, your minimum down offer. Lots of people got outbid. Lots of people were pushed out of the market, especially our locals, our Las Vegas locals. And last year, people were on the sidelines waiting because the rates were going up. There was intimidation in the market. But right now, you tell me, Alexandra. I think prices are. What's your opinion? I think prices are better right now. I think we don't have as many buyers, unfortunately, on the market, and buyers are still waiting. I personally have over 100 clients that are approved right now with the pre-approval letter in their hands, but they decided to wait for better prices, better rates, whatnot. I don't necessarily agree with them, but we're just waiting with them. Um, so today, in my opinion, is a perfect time to enter the market. You don't have competition. No one's going to outbid you. The seller will definitely consider your 3%, 5% down, minimum down offer, so you can become a home today when, if rates drop, no matter when that is, a year or 2 years from now or 6 months from now, if rates drop, if we have a frenzy, you will be outbid again. So today is a wonderful time to enter the
And I
market and own
think
something.
we actually touched on this question and we asked that question in our previous live last week. What do you guys think when
Uh,
interest rates drop? And the reality is when we have low interest rates, or as consumer also you hear it being called cheap money. When the money is cheap, everybody is buying. And this is when the bidding wars
that's
happen. And
true.
like you said, last 2 years, the money has been so cheap and people were buying and they were spending that money with such an ease that we were seeing the offers that were hundreds and thousands of dollars, like overbidding. And I'm not kidding, like in an average price range of $500,000-600,000, we were seeing up to 10-15% overbidding, and it was still super hard, super difficult to win a contract. Most of the contracts were won by the buyers who were buying either cash or with the huge percent down payment, or with the great amount of funds to cover the difference between the appraisal value and the house price. And this is one of the things, like when
That's
people are
correct.
talking to me and they're like, "Oh, the housing prices are going down." Guys, they're not so much going down as they're normalizing. Our market is normalizing. Thank God we're not in this artificial and uh, super, like super unhealthy frenzy as we were within the past 2 years. The housing increase in prices that we experienced, this is not natural. This is not normal, and it was not supposed to be like that. So, if to give you an analogy, we were driving like 100 miles per hour down the highway, like with the housing prices, and every new home that was coming up onto the market, it was priced higher and higher and higher. It would be priced higher and it would be overbid with the multiple offers. What we're experiencing right now, first of all, sellers are more adequate with their pricing, with the initial pricing of homes. And of course, with a lot of buyers sitting and waiting on the sidelines, we have an absolutely reasonable market where we can bargain, where we can negotiate, where we can ask for repairs, for closing costs, and where actually the appraisal values matter. And I think this is the most important thing that is going on with our market, is that we actually now paying attention to the appraisals, and this actually helps our buyers, our consumers, to buy homes with better values. David, what do you see on the appraisal side of things?
Appraisal side of things, I do see homes appraising. I mean, in 2021, appraisals would come in low. Appraisals would come in usually at list price, and if you added another 30,000 on top, then you'd have to cover it. So appraisal was always low than our contract price. And right now, with the exception of one appraisal that was very, very unreasonably priced on the strip, everything else has come in the last several months has come in at value. So our buyers are reasonable, our agents are reasonable. No one's crazy enough to overpay. Can I just sort of sideline, because I just thought of this. I'm not gonna name our client's name, obviously, for his privacy, but you and I are closing a loan today, and you negotiated such a crazy amount from the seller. His rate's 4.8 today, 2023. His rate's at 4.8. So it is possible, if you So if you get a motivated seller and the seller does contribute something, and then we apply that towards his interest rates, I mean, the clients are going to be ecstatic. And I told him, I was speaking with him yesterday, I said, if rates drop, you're not going to refinance probably
And
because you got such a good
here's
interest rate.
obviously not naming anybody, but I will be,
But we can't.
I will be doing the whole case study. And I would like to share with everybody who is watching or will be watching. So it is a real client who is getting into the house. He's getting into the house with less than $11,000 of his own money. He is not paying. He is
No
not
kidding. Yeah.
paying a penny for his closing costs. His closing costs are totally covered, 100% covered by the seller. And the interest rate buy down was covered by the seller as well. So these are the opportunities. Go ahead.
His interest rate, I'm looking at his lock right now, is 4.889 right now. So guys, it's possible. Don't wait. I just want to interject something. When people have told me, I don't know how many times my clients have told me, David, we're going to wait for the rates to drop. Well, wait for the cheap money to get cheap money. Okay, so this means that own the house before rates drop. If rates drop, we're going to have a 2020-21. We're going to have a frenzy. Low money means high costs. Do not enter the market when there is a frenzy and craziness going on. So my advice is to own a house, and when rates drop, when the money is cheap, get the cheap money, meaning refinance. Swap out your high interest rate mortgage with a low interest rate mortgage. You don't have to be part of that frenzy out there. Call us, or we'll call you, we'll refinance you, we'll get you as low a rate as possible. Does that make sense? So if you're waiting for the cheap money, well, don't wait for the cheap money to buy an expensive home. Homes are cheap now, in my opinion. So get the cheap home now, then get the cheap money.
And we have one of our listeners, Cardo Captain. If you need help getting the money towards your closing costs, if you need help getting into the house, we have, between David and I, we have all the tools and expertise to actually assist you into getting into a house. Like, you guys have no idea at the amount of opportunities that we are exploring in this market. And this market is actually so favorable for those who are entering into owning the house for the first time. I'm talking about the first-time home buyers. I'm talking about those people who are making their first step from being a renter into becoming a homeowner. Those people who are just at this age, because remember, guys, we have the biggest generation of millennials who are right now at the peak of their buying power and at the peak of their buying rates. And we also have an absolutely realistic market for the buyers to come in and to use the opportunities of having their closing costs covered. And you don't have to overpay. That is one of my main things, and my concern as the realtor. I do not want to see my buyers, my clients, overpaying for the properties. I want to see you guys paying the fair market price. So, David, one more time, like, who has the most opportunities in this market? Like, what are the, please contact us. Cadeau Captain, please contact us. You have my information. You have David's information. We will be happy to connect with you after this live stream and explore everything that we can do for you. And one more time, who has the most opportunities? The lowest down payments. What are our lowest down payments of this market today?
Okay, so we have two major groups of, well, I would say three. Okay, you've got VA, which is for veterans, and this is absolute privileged. Not everyone's a veteran, which VA loans are at zero down payment. You've got FHA, which is a government loan. It's insured by Federal Housing Administration. It's a government loan. It's a wonderful loan, 3.5% down. That's what our client is doing, 3.5% down. And you've got conventional loans, and these are usually, most of the time, 5% down, but conventional loans also have some types of loans that you can get with 3% down. There's a bunch of restrictions that you have to qualify for, such as to be a first-time home buyer, this and that. But some conventional loans will let you put only 3% down. So 3% down, 3.5% down, I would say, is as low as it goes.
0 for VA, 3.5 for FHA, and 3% down for conventional. And we're talking about owner-occupied, guys. These are not the investment loans. These are owner-occupied. Excellent.
That's correct.
Excellent. So,
Thank you.
We talked about a lot of topics over here, but I would like for you to tell us about the special that you have for everybody who is watching us live or watching this, watching us in record, because you are so into helping first-time home buyers and the home buyers in this market that I know you are extending your offers beyond the excellent service and mortgage industry. What is the special offer that you have for those who are looking to get a mortgage this year?
So since my background is also in tax preparation, even though I haven't done taxes for a while, my wife, we as a family, we own a tax preparation firm, and I feel like the proper tax income education, the consult, is such a crucial part of your financial well-being and buying a mortgage that what we're doing is we're offering a 1-hour consultation with one of our tax professionals that will go through your documentation and will even help you find, will help you file your taxes, or will consult you at least if you have your own tax person. But I can't tell you, Alexandra, how many times people are coming in, people that could have owned homes years ago, especially those that are self-employed, that could have built hundreds of thousands of equity, could have owned their own home, and they're still renting because of the lack of right advice, the proper advice. And that's what we're doing. It's very, very important to get in front of us. It doesn't matter what you feel about the market, whether you want to buy now, next year. It's your personal opinion, but get your taxes right, because a lot of times buying a house, it requires preparation on your taxes with your credit and all. So understand where you stand. So to bring it home, we offer up to a $500 value, 1-hour consultation with one of our tax pros. Go sit down. You can sit down with me if you want to, or I will make an appointment, go sit down at IQ Tax and have a full consultation, understand what you need to do to become a homeowner.
Excellent. So one more time, it is a free consultation up to 1 hour into going into your taxes. Hi, Peter. Going into your taxes with David or one of the tax preparers in the IQ tax office for you guys to go through your taxes and actually see if you could qualify for the mortgage this year, or what should you do to qualify for the mortgage this year. And David, really quick, give us the overall rundown, like what is required to qualify for the mortgage, like on the very basic surface.
Well, okay. A mortgage has, I talk about this maybe 10 times a day. A mortgage has 3 main ingredients, guys. CIA. Okay, that's easy to remember. CIA, credit, income, assets. So again, doesn't matter when you want to buy a house. You want to come sit down and talk to me for 30 minutes, for an hour. I'm not going to charge you. The credit, we can pull a soft credit. See where you are. If you're at perfect credit, then beautiful. We don't put a hard ding on your credit just yet. Understand what your C is. That's the third ingredient. That's one of the most important ingredients. Do you have to pay something down? Do you have a collection you need to work on? Understand what your credit is. Income where is my specialty because of my tax preparation background. Understand where your income is. I mean, if you're a W-2 employee, then you probably don't have much sway in how you file your taxes. But again, understand where you are. Are you tipped? Are you commissioned? Are you just regular salary? Did you just change your type of income, your industry? Were you a baker, now you became a shoemaker? Who knows? So come talk to us. There's so many things that we need to look at before we approve a mortgage for you. And assets, how much money do you need? Well, we talked about this, the 3% down, 3.5% down. That's an easier conversation. How much to save, where's the money? Don't keep it in your mattress, keep it in a bank. So again, credit, income, assets, remember that, and come get a sort of a lowdown of what you need to do to own a home, because what's rent, Alexandra? Rent is 100%
Exactly.
interest.
It's the mortgage payment, but for somebody else, not yourself, not your own mortgage.
Oh, I love my tenants. I love my tenants. My tenants make my mortgage payments. So rent is 100% interest.
David, I know we're on half an hour, but we do have Peter Flores, one of the brilliant agents from California, one of my referral sources from California. Okay. And he was actually asking the question, why people don't want to buy in 2023 is because they have a lot of fear, and they have a fear on what happens if the house values go down. And I wanted, I'm going to give my side of the story, and I want to hear your side of the story. What happens if the values go down? Yes. Like if you buy in 2023 and the values go down. So guys, whenever you buy, if you buy as a long-term hold, and if you buy as an owner-occupant, you will see you can contact me for the data, and I will show you the data going like 40 years back, 50 years back. The housing prices overall tend to increase. So for those of you guys who were thinking and who were paralyzed with this fear of, I don't know what's coming, neither do I, neither does David. Nobody knows what's coming. I don't even think our government knows what's coming next. But the truth is, if you and I had a time machine and went back 5 years ago, David, would you buy a house 5 years ago?
I did buy a house. Okay. I did
so
several,
you just
absolutely.
answered my questions. Like, you would buy everything that you could. Same thing when people were paralyzed. Absolutely. In 2010, in 2011, the memory and the pain of 2008 was so fresh, and so like people were so sore from 2008, and guess what? People were still buying in 2010 and in 2011, and their rates were in sevens. They were buying with the sevens. I had people buying with 9% interest rate. But guess what? When you look back at those people and you ask them, have you ever regretted buying in 2010 or in 2011? They will never tell you, I do regret buying. They will tell you that they refinance a couple of times afterwards, but they will not tell you that they regret buying. So for those of you who are not buying with the fear that the values are going to go down, if you're buying to hold it long term, you guys are going to win long term, because long term you're going to create equity, and you're going to use your house as the piggy bank where you put in equity every single month. Whether the house, like, even let's take the worst case scenario. Let's say that we're going to lose some value over a couple of years. In 5-7 years, it's going to go back up. We did not have yet the time in the U.S. economy where the housing prices were going down for 3 or 4 years in a row. It did not happen yet.
So, Alexandra, let me ask you a question. Would you say there's about, what's the inventory today on the market? About 9,000?
Las Vegas Valley, we're close to 10,000.
10,000, okay. I have a feeling, and there's no study done, so there's just take my word, it's my opinion. I have a feeling if we have 10,000 homes on the market, we probably have double the amount of people waiting to buy those 10,000 homes. So, and the number one factor that I feel that is stopping them from buying today is fear and uncertainty, but they will buy eventually. And the longer they wait, the bigger that number is going to grow, because we haven't had everyone that wanted to buy in 2021, 22. This year, people are waiting. So we've had over 2 years that people haven't bought, and that number of buyers is increasing. I'm speaking with past clients. They're like, David, we want to buy something. I'm speaking with new leads they want to buy, but they're waiting. So the number of buyers, in my opinion, is much greater than the existing inventory. So once we have that lower rate or whatever it's going to take to give that confidence, we're going to have another frenzy and another big, quick appreciation. It's in
And
my
this
opinion,
is
inevitable.
something that I want you guys to hear. I want you all to hear. And if there's only one thing that you're going to remember from this video, is that when the interest rate goes down, you want to be in the position when you already own your home. And the only person that can stop you from refinancing is yourself. Because when the interest rate goes down, if you try to buy at that market, you're going to be overbid. When the interest is low and you already own the home, there is no competition, there is no overbidding. You just go, and at your own leisure, you file the documents and you actually refinance. And this is what a lot of people have done. And David will tell you that nobody keeps their mortgage for 30 years. I might be the first one, because with the interest rate below 3, because I don't see the point of paying off that house quickly with that low of the interest rate.
No
So,
point.
but once again, guys, when the interests are low, own your house at that point. So you need to be proactive. You need to enter into being a homeowner before those interest goes down. And that's one thing. Another thing is that right now, you don't have to overpay the 10% that you used to overpay 2 years ago. Within the last 2 years, you're saving the 10% that you were not overpaying, and you were saving another up to like 5% on getting the seller concessions. And if you don't think that this is possible, you guys really need to talk to David or myself and see what we can do and how we can negotiate these things for you. So David, we're getting onto being a very long, to having a very long live again. But if there are any more questions that we can answer for you guys, we will be happy to do it once again next Wednesday at 9:30. If you have more questions, please feel free to comment on the video once we post it. You can comment with your questions. You can always DM us. Oh, we do have a question. Okay, I want to buy a farm here in Oregon. How low of an offer should I give to the seller if the farm has been on the market for over 6 months? So this is an awesome question. Thank you, first of all. David, are you licensed to do loans in Oregon?
We absolutely are licensed in Oregon, so we'll be happy to help you with the mortgage, sir. And if it's a farm, you probably should need to look at a USDA loan, or just a regular Fannie loan, depending on the acreage of the land. But I would say, how low an offer? There's no. It depends on the market, in that market. So we're not from that specific area. I suggest you go on Yelp, go on Zillow, find some of the top agents
I
in
have
that
an
specific market.
excellent agent
You do?
in
Okay.
Oregon who we can refer.
Oregon, you do?
Absolutely.
Okay.
And one of the things that I would say is that it doesn't matter of your region, it doesn't matter of the area. In order to negotiate, you need to start a conversation with the seller. When you start a conversation with the seller, you need to know the motivation of the seller. And being 6 months on the market is like everybody has their own scale in their head. if it's a long time or if it's a short time. First of all, talk to the agent and see how, like how fast those farms or similar farms are selling in the area. Maybe an average time for the farms being sold in that area is 8 to 9 months. So 6 months is not really a long time. Another thing, ask your agent to talk to the seller. And what is the seller's motivation? If the seller is just seeing, like some sellers are just testing the market and they're seeing if they can have a high dollar and they're not ready to sell, and it might not be the most opportunistic time to negotiate the price. However, some of the sellers have, let's say, life conditions or life circumstances that are going to push them into making a deal sooner or later, and sometimes the seller would not accept your offer at the very beginning, but months down the road with no offers, they might come back to you and say, hey, you know what? We've thought about it many times. We slept on it like for 30 nights in a row, and now we're thinking that this is where we can meet or this is where we can negotiate. And guys, please don't be stuck on the price, because there's so many variables in the contract and there's so many ways how you can win, because David would tell you, like getting the lowest price is the great thing if you're paying cash. But sometimes, like getting your closing cost covered, which could be, like David, what would be the closing cost? Let's say we're talking about $500,000 loan with 10% down. What are we talking about the closing costs?
Depends on property
Give me the
taxes,
ballpark, like
specifically in Oregon, but less than 2%.
Okay, so 2%. 2% of $500,000, we're talking about $10,000. So you have a choice of giving a person either an offer for $500,000 and asking for $10,000 back or cover your closing costs, or you have an opportunity, let's say, to give them an offer for $490 and then take the $10,000 out of your pocket and cover your closing costs. So there are many variables that could be placed into the contract that will help you win the farm. If you want the farm, you can get that farm. You need to know how to negotiate, and you need to think out of the box, and you need to be flexible, and you need to talk to a professional, work with the professional. And I'll be happy to refer you to some excellent agents in Oregon so that you could handle that negotiation, and David would be happy to help you and to show you all the loans that you can get. Let me know if we responded to your question. If you need a personal consultation, we're here for you guys to do so. Remember about the special offer from David and IQ Tax, and always guys, we're here to help you. We're here to answer your questions. We don't charge for the consultation, so let us know what we can do for you and what kind of fears you experience in this market, because guys, remember, fear is the lack of information, and our purpose doing these lives is to give you the information to respond to any question that you have and to tell you what the market is doing. Captain, I'm glad that we could assist you with your question. Once again, don't be shy to reach out to us. Thank you, guys, and we will be posting it, and we will be also posting it on YouTube. Please don't be. Thank you, David. You're amazing. That's why I work with David. He is amazing. Like, their whole team is amazing. They are amazing, and they're providing excellent customer service. So, guys, please don't hesitate ever to contact us. All of our information will be in the description to the video. We will be posting this one and the one from the week before on YouTube. And thank you so much for being with us. Thank you, guys.
Thanks, everyone.
How do I end the link?